Alright, episode 2, alright? What are candlesticks? So this is the important video for beginners. This is how you're going to start understanding the charts, how you're going to start reading the charts, right? Because you're going to be using candlesticks to look at the chart, right? You're going to be using candlesticks. It's the most popular thing, it's the easiest thing, and you just have to know how to read them, right? So this is going to be just a basic video, right? You can write this down, you can save these images, whatever you want, right? So what actually are candlesticks? Well, what do candlesticks do? So what they do is they represent how much price moved within that time frame. So right now I'm on the 1 hour. If I got a candle like this with a bullish candle, it represents how much price moved up in that 1 hour, and with a bearish candle it shows how much price moved down in that 1 hour. So where do these candles open and close? Well, right here for a bullish candle means price is moving up in that hour. We have the open of the candles at the bottom, right? We got this bottom line here, that's where the candle opened. So on the when the new hour came, say it went from 1 o'clock, when 2 o'clock happened, right? When it turns to 2 o'clock, this is where the candle would open, and when it turns to 3 o'clock, this is when this candle will close, right? And for a bearish candle, if you're on the 1 hour time frame like I am, this is the same thing for every time frame, right? But if I'm the 1 hour like I am, for a red candle, a bearish candle, the downwards candle, this is where price will open, this is where the candle will open upon the new hour, and this is where it will close when the new hour comes. So pretty basic, right? So what are wicks? Wicks just show the wicks. Well, wicks actually are just these lines on the top of the bottom of the candles, right? They're on every candle, but some don't have them. But pretty much every candle you see, they're the same for either a bullish candle or a bearish candle. What they show is the top wick shows the highest price that candle reached within that time frame, and the bottom wick shows the lowest price that it reached in that time frame, right? This is the same for every candle, right? So important candlesticks, right? So these are like the main candlesticks you're going to see in the market. These are the things you need to know what they are, right? So you have a bullish candle. This shows prices moving up. So of course it opens here, closes here. That means prices moved up within that time, right? And for a bearish candle, it shows how much prices moved down within that time. So I'll find an example real quick. So you can see here, this is a bullish candle because it moved up in that time, right? And then it closed, and that's how much price moved up. Or a bearish candle, here's a bearish candle. This is how much price moved down within that hour. So we got a couple of candles here that I'm going to show you. You can write these down, take a picture, write some notes, whatever. We got a bullish engulfing candle as the first candle I'm going to show you. We got two types of engulfing candles. So we got the bullish engulfing 1, bullish engulfing 2, and the same for bearish. So bullish engulfing, right, 1 is when price is moving down recently. You got a series of bearish candles. Then you see a bullish candle forming, and you get this kind of, the body of the bullish candle closes over the wick and the body of the bearish candle, right? So what does this mean? It usually means that after you get this engulfing candle, it's a price will probably reverse. You probably get a pullback in the opposite direction. So it comes down, you get a bullish engulfing candle, it clears the body and the wick, and then the next candle will most likely be green as well, and it will continue upwards. This is the same thing for the second type of engulfing, but however, these engulfings, they don't clear the wick of the recent down candle. All they cover, or all they clear, is the body. It'll have the same reaction, it'll probably still move up, but these ones are stronger than these ones. It's vice versa for the bearish ones. You have a series of up candles, you get a bearish engulfing, it closes below the wick and the body, and what you'll probably see, most likely you'll see a series of bearish candles moving in the opposite direction after this. Same thing with the bearish engulfing 2, same as the bullish engulfing 2. It clears the body, but it doesn't clear the wick. So you'll probably see some more bearish candles after you see this, right? You probably see more downwards movement, but this, just know that bearish and bullish engulfing 1s are stronger than the 2s, all right? The next thing you're going to see on the chart is a rejection candle. So for a bearish rejection candle, you'll see that price would have been at one point up here, so it would have been a bullish candle at this point here. People started selling it and it turned into a bearish candle. This shows that there's lots of sellers, there's high selling pressure on the chart, there's high selling pressure on in the market, and after you get this type of candle, usually you'll see it move down in the opposite direction. So kind of like the engulfing candle, but this, instead of it happening over 2 candles, you're going to get this in 1 candle. So it's kind of like an engulfing, but in one candle, basically. Same with bullish. After you get this kind of wick, you can see it, or you can anticipate a move upwards. Again, like an engulfing candle, but in one candle, right? And the last thing before I show you some examples is the doji candle. So what this is the body of the candle is extremely small and the wicks are quite big. They're usually the wicks are equal size on either side and the actual body is extremely small. So what this shows is that within this candle, if you go to a lower time frame up here, the candle is moving like this, right? So you got sellers selling up at the top and you got buyers buying at the bottom on a smaller time frame. So the market, you call it indecisive, it would be a choppy market, it would be a volatile market if you get a couple of days. And usually, if it's kind of doing this on a smaller time frame, after this candle closes, you're going to see a move in the one of the other direction. Very rarely do I see a doji candle and then it doesn't do anything after, right? Usually you get some sort of move up or down off a doji candle. So I'll show an example of engulfing candle here. Let me try to find one. Engulfing candle. Right, there's one there already. Engulfing candle right here. You got a series of downwards candles, a series of bearish candles. You get an engulfing candle that clears the body and the wick, and you can see how far it moved off this. So if you were even to take a trade off this engulfing candle, if you see, okay, it closed, it's engulfing, I would place a trade here, stop loss, wherever, and you could have made money off that, right? So here's a bearish engulfing as well. This doesn't actually matter. Again, bearish engulfing, green candle turns into a red one on the next one, clears the body and the wick, and you move down. It wasn't as big a move, but it still moved down. It didn't just do this and then go up again, right? Next candle, what the fuck is the next candle? A bearish rejection candle. A bearish rejection. Here's a big fat one right here. A bearish rejection candle. What this shows, or I already explained that. So as you can see, you got a bearish rejection and it moved down very fast. Now it was a short-lived move, but if you're seeing this happening in real time, you can see that the next couple of hours or however long you want it to be or however long the time frame is, you're going to see the next couple of candles are going to be big and red, right? So always a rejection candle always almost shows a reversing in price. And here is a bullish candle, right? A bullish rejection. Now the interesting thing about this is that the price didn't actually turn bullish on this candle, but you still got a bullish rejection. So the price didn't have a rejection then turn green. What it did was it had a rejection and stayed there. It closed before it could go green, it closed before it could go bullish, but you still got the bullish rejection because the wick on the bottom was huge, right? And there you go, there, like butter, right? It just moves upwards after that, right? And the last candle, a doji candle. Right here you can see a doji candle, right? Body extremely small, wicks are pretty big for the size of the body of the candle. So as I said, usually if there's a doji candle, you're going to see some sort of move off of it. Like I said, like here, right, you got two doji candles and it didn't really do anything, but that's kind of unlikely from my experience anyway. Look, you get dojis all the time. All it's doing on a lower time frame is moving up and down pretty much, right? So there you have it. That's what candlesticks are. Bullish candlesticks, bearish candlesticks. You got the three most probably important candlesticks as well. And you just learned all that in about, I don't know, 5 minutes, something like that. So yeah, that's an important lesson. Take a picture of this if you want. If you're a beginner, take a picture of this, write it down, do it out on your own chart, look for examples. There you go.